Hello everyone, I hope you all are doing well. Myself Saujanya, Department of Commerce and Management from Sanjeev Degree College. Today I would like to discuss about paper title Tally with GST. Before going to our topic, let us have a look of syllabus in detail. Tally with GST applications. The subject consists of 5 units. Unit 1, Introduction to GST, difference between GST and VAT, tax subsumed under GST, exempt from GST, components of GST, GST registration, benefits of GST. Next, Unit 2, GST transition, GST rates, ledgers, ledger creation, single and multiple ledgers, altering ledgers, configure stock ledger, GST rate allocation to stocks. Next, Unit 3. In that, GST invoices, creating new voucher types, customizing and the existing voucher types with applicable GST rates, alteration of vouchers, deletion of vouchers, input tax credit on purchase vouchers. Next, Unit 4. In that, GST returns, regular monthly filing returns, composition quarterly filing returns, generation of return form number GSTR1, form GSTR2 and form GSTR3. And last, Unit 5. In that, payments of GST tax online, reverse charge mechanism, records to be maintained. So this is your syllabus. Now let us start with Unit 1, Introduction to GST. Before going to the topic, first discuss pre-GST tax structure in India. So here tax is a way of income for the government which is used for various purpose in order to boost the economy of the country. As you already know that there are two types of taxes in India. One is direct tax and the other is indirect tax. Here, direct tax is a tax that is directly levied on a person and collected from the same person. And example for direct tax is income tax. On the other hand, indirect tax. Indirect tax is a tax that is levied on a one person and collected from the other person. And example for indirect tax is sales tax. So here first we need to understand the present indirect tax structure in India. So once look out this picture, the current system of taxation on goods and services is categorized by multiplicity of taxes on goods and services. Here when you observe this picture, indirect tax is levied by two governments. One is central government, the other is state government. Here central government excise duty on manufacturing, customs duty on imports and exports, service tax on services are levied by the central government. On the other hand, VAT, entry tax, purchase tax, octroi and duty on liquor are levied by the state governments. Apart from this, there are various other taxes. Such multiplicity of taxes distorts the tax structure and brings in complexities. So there are some problems in this tax structure. See the first one, problems in pre-GST tax structure. See the first one, multiplicity of taxes. Second one, complex. Third one, cascading effects of taxes. Fourth one, tax arbitrage. Fifth one, lack of uniformity. Sixth one, complexity in determining the nature of transaction. Seventh one, multitude of exemptions. Eighth one, lack of transparency. Ninth one, narrow base. And last, 10th one, litigation. Now see the first one, multiplicity of taxes. So in India there is multiplicity of taxes as both central and state governments. Here both central and state governments are levying tax on same item. Constitution empowers the central government to levy excise duty on manufacturing and service tax on supply of services. Further, it empowers the state governments to levy sales tax or value added tax on the sale of goods. And this will lead to multiplicity of indirect taxes in the country. Now see the second one, complex. So the taxes are levied by the central government or as well as state government. So a person has to maintain accounts which will compile all the applicable laws. This has resulted in a complex indirect tax structure in the country, and which also results into increase in cost of compliance. See the third one, cascading effects of taxes. In current indirect tax structure in India, there is cascading of tax due to tax on tax. No credit of excise duty and service tax paid is available to the traders while paying the VAT. This results in the increase in the overall burden of tax in the hands of end customers. See fourth one, tax arbitrage. Multiple taxes results into tax arbitrage. Due to multiplicity of taxes, some states have high rate of taxes whereas other states have low rate of taxes, and this will result in getting tax benefit. Industry moves from place of high rate of taxes to place of low rate of taxes. So next fifth one, lack of uniformity. Present structure of VAT across states lacks uniformity. There are differences with respect into definition of goods, capital goods, classifications, exemptions and procedures. This lead to many problems for companies having business in multiple states. So this will lead to lack of uniformity. Sixth one, complexity in determining the nature of transaction. Here one main big problem in present tax system is to determine that whether a particular transaction constitutes sale of goods or supply of services. This problem is most acute in the case of software products. This distinction becomes important as the sale of goods are governed by the state VAT and the sale of service are governed by the center government. So seventh one, multitude of exemptions. Under the current system, businesses enjoy many kinds of exemptions and concessions under different levies, which break the chain of VAT and thus create distorts. Eighth one, lack of transparency. Under the excise and service tax law, currently there is no mechanism and to verify the claim of SunVAT credit made by the manufacturer or service provider. Even under state VAT laws, all the states in India do not have the mechanism to cross verify the credits, due to which sometime taxpayer gets benefit of tax credit to which they are not eligible. Ninth one, narrow base. Due to different thresholds under different laws as well as numerous exemptions and concessions, the current tax base under indirect tax is narrow as compared to the other countries. And last, 10th one, litigation. So in India, rate of litigation for matters related to indirect tax is very high. There are many contractions and ambiguities in indirect laws in India. Applicability, exemptions, valuation, classification, input credit, penalties, etc. are few reasons for ever increasing and non-ending litigations in the country. So these are the problems facing in the pre-GST tax structure in India. Now see the meaning of GST. Here GST means goods and service tax, as you already know that one. So meaning of GST. France was the first country to implement GST in the year 1954. And within 62 years of its advent, about 160 countries across the world have adopted GST because this tax has the capacity to raise the revenue in the most transparent and neutral manner. So GST is a comprehensive indirect tax which is to be levied on manufacture, sale and consumption of goods and services. It is applicable to the whole of India. This tax will replace all the central and state government taxes. The introduction of GST is a significant reform of the indirect tax structure of India. So under GST method, all the central and state government's taxes are merged into a single tax, and which will reduce the cascading or the double taxation effect. GST will is levied on each stage of sale or purchase of goods and services throughout India based on the input tax credit method, wherein manufacturers and traders can get tax credits on the expenses incurred for inputs or goods purchased for the purchase of manufacture or resale. Under this method, all the GST registered businesses will be eligible to claim the tax credit. The main aim in introducing GST is to abolish all the indirect taxes. Every person who is providing or supplying services is liable to charge for the GST. So here GST is a tax on goods and services with comprehensive and continuous chain of set of benefits from the producer's point and services provider's point up to the retailer's level, and it is essentially a tax only on value addition at each stage, and a supplier at each stage is permitted to set off through a tax credit mechanism, and GST paid on the purchase of goods and services as available for set off on the GST is to be paid on the supply of goods and services. The final consumer will thus bear only the GST charged by the last dealer in the supply chain, with the set of benefits at all the previous stages. So I hope you understood this session. In next class we will go to discuss some more interesting topics. Until be safe. Thank you.